Hello traders, my name is Tomasz Wiśniewski and I'm Head of Research and Education at Auxiliary. Welcome on the webinar. I hope that everything is okay with audio. Please, if you could confirm first on the chat that you can hear me. That would be great if you could write on the chat if you can hear me well. All right, thank you very much. So again, welcome. It is a pleasure that you are here. So first, I would like to start with the survey. If you could please cast your vote. The question is, will there be a war between the United States and Iran and 2020? What do you think? What are the chances? Please cast your votes. And also, in the meantime, please, if you could tell me on the chat, is this day and the hour of this webinar, is it convenient for you? Well, obviously you made it, so the date is good for you and the time, but maybe you have other proposal, like what time and date would be the best for you for this webinar? Maybe a few hours before or later, or in the weekend, for example, Saturday, Sunday, Friday, Wednesday, I don't know. If you could please tell me what are your preferences, that would really help us to set the perfect date for you for the next webinars. Okay, so now is the perfect time. I will wait a few more minutes, 1-2 minutes for your answers. So when is the best time for the webinars for you? Is it weekends, evenings? Okay, thank you. Saturday, Friday. We'll wait 1 more minute for your answers. Hour later, thank you. Okay, in the meantime, I can see a survey, and most of you said that there should not be a war between the United States and Iran in 2020. Yes, only 8%. So we are not convinced about this. Well, I must agree with you. I also don't think that we should get a war. Actually, the tensions decreased. Now we do have other problems like this coronavirus in China. And this is the main cause of the risk of moat on the market. So pretty much, guys, 2020 is not the best year so far. January didn't even finish, and we almost had a global war. One continent was on fire, and now we do have coronavirus sweeping across the globe, attacking new countries as well. So, well, it started really crazy this year. We'll see what will happen later. Let me share you my screen. Okay, share like this, preview. Dear traders, do you see my screen? Do you see the presentation? Please confirm if you see the presentation. Yes, excellent. So we can start. Are we on the verge of a new war? It's a special webinar which we created because of the increased tensions in the Middle East, and we just want our traders, we just want the auxiliary traders to feel confident when trading. So we want you to be educated, that you will not be surprised by certain market developments, right? So we want auxiliary traders to be professionals and to be ready for any situation that is coming on the market, from central banks, from governments, geopolitics, etc. So that's why we meet today, and I will talk about trading during armed conflicts, wars, etc. Because, well, we need to be prepared. We need to be prepared for every scenario. Okay, but first, a small introduction, because you need to know who is teaching. So my name is Tomasz Wiśniewski. I am a professional trader. I prefer trading technical analysis for my trading. I use price action. I have 10 years of experience in trading. In that time, I did a lot of webinars, seminars across the globe, from Mexico to Philippines. I give interviews to the media, TV, radios, newspapers, magazines, trading portals, etc. So that's it. You are in safe hands, and I think I can share my knowledge with you. Okay, first of all, let's see if this situation between Iran and United States is something new. Well, no, it is not new. As you can see, Iran and United States are clashing for a long time. Most recently, we had increased tensions. Maybe some of you don't know, because of the killing of the Iran general. It was said that he's the second or third, he was the second or third, the most important person in the country. So this is actually it was and is actually very huge, this situation. But it's nothing new in terms of the increased tensions between Iran and United States. One of the deadliest things that happened between those countries was the Iran Air Flight 655 shot down. So plane full of people was shot down by United States. We all know what happened a few weeks ago. Similar situation happened in Iran, but it wasn't the American plane. So those things definitely are not pleasant for anyone, and unfortunately they happen. This is the table which shows you S&P 500 performance. S&P 500 is the most popular, is the biggest index on the American Stock Exchange, combining 500 biggest companies on the American Stock Exchange. And you can see those conflicts from 1953 to the June 2019, and you can see the performance of the S&P 500 1 week after this event, 1 month after this event, 3 months after this event, and 6 months after this event. What is the common thing here? That almost always the performance was positive after some time. So like, let's say 1 month or 3 months. That is the first hint. That is the first lesson that we can have today. General thoughts about this conflict. I post this video here because you need to understand. Well, maybe some of you are interested in geopolitics. I love geopolitics. So let me explain you the escalation ladder. How does it look? You have 2 ladders here. This is pretty much what happened with killing the Iran general. What is the escalation ladder is that one country is doing something against another country, and this second country is doing something proportional to this as a response. Then the first country is doing something again a little bit more serious, a little bit more bigger, and another country is responding accordingly. What happened between Iran and United States with killing the general was that United States jumped many steps of this escalation ladder because that was a response for attacks on the U.S. embassy in Iraq. It didn't get very ugly. They had problems, obviously, over there. But the answer for this, for those attacks on the embassy, definitely should not be killing the second or the first person in the country. So what the United States did is they jumped several steps in the escalation ladder. That's why it was such a big shock for the international society, for the governments, economies, etc., that it was a huge escalation of the tensions. Okay, so that's why this video here. What are my thoughts in general about this conflict is that United States currently they cannot focus on Iran. They cannot focus on Iran because they have much bigger enemy right now. Not official enemy, but the country that they are focusing on right now. And this country is, please answer on the chat, which country is is on the focus of United States? China. Thank you very much. China is right. So they are not enemies at the moment, right? But China is growing. United States is a global hegemon. Let's say all those institutions that we have right now, United Nations, World Bank, International Monetary Fund, etc., were created by the US government. And now China tries to shift this, let's say, the situation in the global powers. That's why naturally, even if they are not going into the war, naturally they are becoming enemies, geopolitical, political, economic, and maybe, hopefully not, but military enemies. So China is on the radar. Even Pentagon, Minister of Defense of United States, they created strategy. It's called Shift into the Pacific. So United States are shifting their attention towards the Pacific Ocean. So obviously China. In Europe, there is a big concern that United States does not want to operate in Europe anymore, protect Europe anymore. We all know that United States wanted to withdraw from Middle East. And the reason for this, one of the reasons for this, is that they want to focus on China, on the Pacific. Also, what's the difference? What are the factors which are against the war? Is that Iran is much stronger than Iraq when US had a war in Iraq, right? So it wouldn't be so, let's say, easy as it was with Iraq. Also, currently, society is totally against the war, especially the land war, where you had to send thousands of troops to one country. Society maybe does not have, is not against the airstrikes, for example, done from the distance, done mostly with missiles and advanced techniques. But society is definitely against the land war, against sending troops to the foreign country. Yes, we are recording this webinar, so you will be able to watch it later. Don't worry. No worries. Also, President Donald Trump said and actually started to withdraw troops from the Middle East. They are leaving only those which meant to protect the oil fields, because we all know what it's all about. So it's about the oil. So those troops who are protecting oil fields in Syria or Iraq or Kuwait, they will stay. But rest of them were meant to come back home. Also, on the other side of this game, Iran would also prefer United States to withdraw troops from the Middle East. So they don't want to increase tension with United States, because increased tension and a situation leading to war would require United States troops to stay in the Middle East. Iran does not want to do this. Well, they don't want war, obviously, right? But they don't want even United States to be present in the Gulf region, because withdrawal of United States troops from the region would definitely be better for Iran than troops staying in the Gulf region. Okay. On the other hand, we have Donald Trump, President Donald Trump, and we don't know what actions he will make, if he will know, whether he will know if he is not going to get re-elected. All right, because for now he has quite big chances for re-election, and if he has chances for re-election and he knows that society is against the war, he will not lead to the war. But if he will know that he has no chances for re-election, he will not care about what society thinks. Okay, so that's a thing that we need to have at the back of our heads. We need to think about this. What Donald Trump will do if he will lose chances for re-election. But at the end of the day, the Congress has to make a final decision about the war, and most probably they would oppose any actions like this. Okay, any questions? Yes. Let me show you this table. This table is with all major conflicts that happened in the past 60, 70 years and the performance of S&P 500. Pretty much from this table, you will see how stocks, how financial markets are behaving during armed conflicts. So basically, you have all the conflicts that happened: Pearl Harbor attack, assassination of JFK, of John Kennedy, the President of the United States. We have Yom Kippur War in Israel. We have London subway bombing, so terrorist attacks. You have North Korea missile crisis, and you can see the reaction of S&P 500 during one day. You can see, for example, when JFK was assassinated, minus 2.8%. That is a huge drop. And for example, when there was bombing during the Boston Marathon, which happened 7 years ago, long time ago, right? Well, I think that it was like last year or something, but this time flies. So 7 years ago, minus 2.3%. And the total drawdown, which happened after this event in the next few days, but you can see calendar days to recovery. How many days did it take for this index to recover? Obviously here, Pearl Harbor attack, that was the involvement of the United States into the Second World War. So it took some time, but you can see that it took us less than 1 year to recover, right? So at the end of the year, at the end of the war, because the war ended in 1945, we were positive. During the Second World War, this is crazy. At some events like London subway bombing in 2005, it was 4 days to recover. And by the way, I was in London back then. I was actually in the city. One of the bus exploded that I often took, so that was really something that was very close to me. But anyways, from this table we can see that conflicts that happened, obviously at very first they bring negative reaction, but later there is recovery. There is recovery, and stocks, in particular S&P 500, are climbing higher. Here is another table, similar table to this, where you have not only S&P 500, but you can have various types of assets, how they do behave during the armed conflicts. And here we have Gulf War, Vietnam War, Korean War, Second World War, all wars, and from the time from 1926 to 2013. So we can see that during all wars, positive rises. Large cap stocks, so big companies. Small cap stocks, smaller companies, profits. Long-term bonds, mixed. I would say mixed, but in general, profits. Notes, T-notes, profit. Long-term credit, rises. Cash, mixed, let's say. Inflation, there was inflation, rises. So another table which shows you that stocks react positive on armed conflicts. Here you can see Dow Jones, industrials performance. What happened? Average return before and after the beginnings of last 4 decades US-led military operations. So before those operations, negative. So ahead of the war, negative. Times were uncertain. We didn't know what is going to happen. But when it happened, profit, profit, profit. Quick rebound, drop, profit, drop, profit, drop, profit. Okay? So another proof what is happening. Quick rebound. Another table which is pretty much showing you the same, guys. We had different conflicts from 1956, Suez Canal crisis in Egypt. What happened after 3 months, after 6 months, and 1 year later? As you can see in Suez Canal crisis, negative. 9/11, negative after 1 year. But in general, 3 months later, 6 months later, positive. Positive, usually 90% of the time, positive. Okay, so you can see that stocks are climbing higher during the armed conflicts. Okay, let's sum up the situation on stocks. Why is it happening? Why the situation looks like this? So the biggest problem with the armed conflicts is uncertainty. So before the conflict start, that's the time when stocks suffer the most. Okay, there was a research done in 2011 by Swiss Finance Institute, and they looked at the US-led military conflicts after Second World War, and they found out that in the cases when there is a pre-war phase, stock prices were decreasing, but the ultimate outbreak of war increases them. Okay, so when there is a pre-war phase, this uncertainty before, stocks go down. But once everything is clear, everything is already known because there is a start of the war. So we all know that there is a war, stocks tend to go higher. Again, uncertainty, when we don't know what is going to happen, negatively affects stocks. But once we know what is going to happen, so there is a war, okay, yes, it's terrible, a lot of people will die. This is absolutely the worst thing that can happen to people, to societies, to humanity. But financial markets react positively because there is no longer uncertainty on the market. And there were some events like terrorist attacks, or for example, this killing of Iran general. When the war or conflict starts by a surprise, the outbreak of this war or the situation decreases the prices. Okay, so it's called the war puzzle. But it makes sense. It's kind of logic. If we think that the major aspect that traders are looking for is uncertainty, okay, this is super important for you to remember. There is a question about trading for beginners. It starts on Monday, guys. I will give you all the details at the end of this webinar. So at Monday, you will be able to attend the webinar for beginners. Next slide. Guys, over the last few years, markets have been conditioned not to overreact to political and geopolitical shocks, mostly for two reasons. So if you think like, oh, those guys from Wall Street, they are not humans because they don't care about wars, that people will lose their lives, etc. They just want to earn money. They just want to make profits on people problems, right? Yes and no, okay, because there are different laws and rules applicable for investing, for financial markets. So stocks traders are not in shock because, well, they have strong belief that there will be no significant subsequent intensification of the initial shock. And the second one is that they truly believe in central banks who will protect the financial markets. Those are words by Mohammed Ali El Rian, very popular economic advisor at Allianz. Very smart individual. So in general, financial markets, they don't care so much about wars as, for example, they care about central banks. For them, the huge news is when there is a rate change or Federal Reserve. So let's say National Bank of United States will drastically change their policy. That is huge. Let's talk. I showed you stocks. I think that about stocks, everything is clear. Do you have any questions about stocks? Because now I would like to focus on the safe haven assets, because in theory, right, when there is something dangerous, when there is a risk off mode, so traders are avoiding risk due to the conflicts, they are moving their money to the safe haven assets to protect their investments. So natural way would be to talk about safe haven assets when we are talking about the war. Okay, so let's talk about safe haven assets. The most famous one is gold, obviously. Gold for years used as a safe haven, as a investment which is meant to protect your money in the bad times. Here's, for example, a reaction for the North Korea missile crisis. This is where Donald Trump said that US will respond with fire and fury. We all remember this tweet. This is what happened with gold when the tensions escalate. From $1,250 for ounce, we went $100 in higher in a few days. So you can see a typical reaction of gold when something unexpected happens. Okay. About the gold, guys, over the past 40 odd years, the price of gold has on average risen by 4.1% in the 6 months prior to a conflict turning into a full-blown war. So when we were expecting there was this uncertainty before the conflict, gold was heading higher. But after the event started and people lost their lives, economies were being taken down, were decreasing. Gold didn't move a lot. Okay, this makes sense as gold thrives in periods of elevated uncertainty again, and start of the conflict erases this uncertainty. Everything is known. There is a conflict. Okay, so when there is a conflict and we know everything, there is a war, stocks go up, golds not so much. In the times of uncertainty, when we don't know what is going to happen, gold tends to go up and stocks tend to go down. I hope this is clear. Here is the response of the gold prices for the Iraq War, first Gulf War, World Trade Center attack, and after the killing of Iran General Soleimani. Here, recently the price went a little bit lower, but you can see that gold was following the path of first Gulf War or World Trade Center attacks. Iraq War was a bit different, but as you can see here, this can be explained by the fact that a start of the conflict was expected back then. Here was more of a surprise. That was a surprise, but the Iraq War was more or less expected. So that's the difference. Okay. And one should keep in mind that the market reaction to uncertainty weakens over time, and then fundamental factors take over. So as we said before, what this analyst from Allianz said, traders, investors, they have faith in central banks. They look at the banks, they look at the economies, the fundamental factors. What about bonds? I don't think that we have bond traders here because bond trading is not so popular among forex traders and stock traders. But let's talk about bonds a little bit. Also, you can see the wars, Vietnam War, Gulf War, Korean War, Second World War, all wars combined. And you can see that the return from the stock exchange, from S&P 500, etc., is much higher than return from bonds. Okay, so bonds are considered a safe haven investment. Their performance is not the best. It's not the best, but again, it's because of the situation that during wars, everything is certain and people do not switch to safe haven assets during wars. Before, yes, but during wars, they prefer to trade stocks. Let's see how American dollar behaves during wars. So the evidence of the past 3 decades shows that the American dollar weakens during wars. American dollar is weaker during wars. This is from Kathy Lien, Managing Director of FX Strategy at BK Asset Management. The American dollar fell 5% when the Libyan war started and fell 9% during the first 3 months of the Second Gulf War. The dollar was weak even during the first Gulf War. But again, I think the most important for the American dollar is the Fed policy, interest rates, inflation, not the war. The war affects prices in the first few weeks of the war, of the conflict. Later, as we said, it's macroeconomy, fundamentals, central banks, World Bank's policies, etc. Let's check oil. How oil behaves? Well, it depends from the place where it happens. How oil behaves. Usually after the conflict. Mm, it strongly, again, depends from the place, as you will see on the next tables. But as you can see, 12 months after the lowest point, we are positive. Oil prices, especially when the conflict is in the Middle East, should go up, which should also affect the energy stocks. But for example, those companies which suffer from the higher price of the oil will also suffer, like airlines, for example, because they will have to pay bigger prices for oil. Okay. Crude oil prices react to a variety of geopolitical and economic events. Here you can perfectly see what happened with the price per barrel for different events. Okay, so you can see Arab oil embargo, price goes up, Iranian revolution, price goes up, Iran-Iraq war, price goes up but then declines. Here you can see the price of WTI, West Texas Intermediate, 9/11 attacks up, global financial collapse down, and we had important events from OPEC that they cut the production, which decreased the well, here it was it's 2015, so I'm talking about the current situation, which you cannot see now on the chart, that when OPEC cut the production, the price went higher, which shows you that well, really, yes, tensions, war affect oil price, but it's all about the demand and supply at the end of the day. So even when Iraq invaded Kuwait, mixed reaction, mixed reaction. Here is another table which shows the crude oil price history, where you can see, for example, Iraq-Iran war, despite the fact that it happened in the Gulf region, right? And the price of the oil declined, really. Okay, you can see Gulf War, not a big movement. Iraq War, yes, the price went higher, definitely. Arab Spring, we are already on the high prices, then the price declines. So oil mixed. You can see clear correlation with gold. You can see a clear correlation with stocks, indexes, S&P 500, Dow Jones, etc. But the correlation with oil and war is not so clear. Okay, what about the cryptos? What about the cryptocurrencies like Bitcoin? Many pointed out that recently Bitcoin is acting like a safe haven currency. Okay, because here you can see the reaction. General Soleimani was killed, was assassinated here, and this is the reaction on the Bitcoin. Bitcoin went significantly higher. Okay, so many people started to think and started to treat Bitcoin as a wartime safe haven asset, which is pretty interesting because in reality we don't know what the Bitcoin is. We know that it's a cryptocurrency. We know that it was used by criminals 10 years ago, 10 years ago, 5 years ago, 6 years ago. Now it's used for investing purposes, but many people love Bitcoin for technology. not really for the profits. Some people love Bitcoin for the profits. Some people use it as a payment agent, right? But how Bitcoin can develop is one way here, that Bitcoin can be a safe haven asset, which would actually um, prove what is happening right now. So we do have a de-escalation of the situation on the Middle East. And here Bitcoin was climbing higher and now is going lower. The same as stocks. Okay, the same as gold, the same how gold reacted. Gold spiked up when Soleimani was killed, and now gold is going lower. The same goes with Bitcoin. Bitcoin spiked and now is going lower. So we do have a big correlation between gold, safe haven asset, and Bitcoin. If you have problems with the video or something, do not worry. This webinar is recorded and you will be able to watch it. Just contact your account manager at WWII, and he will be more than happy to provide you a link to this webinar. So don't worry, you will be able to watch it. What matters a lot in terms of the conflict? What do you think? I don't know if you will guess the answer, but let's try. I want to talk about one important thing in terms of the investing and armed conflicts. What matters a lot? Who can tell me? Who can guess? It's a hard question. But what fear? Yes, that's a good one. But in this case, I was thinking about something else. I want to show you something else. But fear is a good answer, definitely. Why, for example, conflict between Iran and United States is not increasing tension so much as it could? Imagine Iran and United States conflict. Beautiful, Mustafa. Where is conflict area? Oh, and someone said region before. Region. Thank you. Wow, I'm really surprised. I didn't expect that you will guess. Location. This is the most important thing for developers where they build flats and houses. Location, but it's also important for traders and for the response for the conflict. Okay, so the conflict between US and Iran was happening in Iraq. If Iran sent missiles to United States or United States would bomb targets in Iran, that would be serious. That would be more serious than it is now. If Northern Korea would send missiles to Japan or United States or Guam Island, right, in Midway, Hawaii, for example, that would be super serious. Look what is happening now. We do have years of proxy wars. Who can tell me what are proxy wars? Proxy wars. Proxy wars, my friends, is happening, for example, in Yemen. Not many people are talking about Yemen, unfortunately, but it's a real disaster for this country. It's a real disaster for this country. There's a humanitarian crisis over there, but nobody talks about this. What is happening in Yemen? We have two forces fighting each other. And in general, it could be considered as a civil war. Okay, it's a civil war, more or less. But the problem is that it's a proxy war between Saudi Arabia and Iran. So both sides of the civil war are Yemenians, but one side is supported from Iran, another side is supported by Saudi Arabia. So two countries are fighting with each other on the territory of other country. Okay, we had a similar situation in Syria. Russians were fighting in Syria, Americans were fighting in Syria, Turkey was fighting in Syria, Iran was fighting in Syria. They completely destroyed a country just to fight between each other. Okay? History would be different if those fights did happen on the territory of Saudi Arabia, Iran, United States, Russia, or Turkey. But it happened on the territory of other country. That's why the response was different. This is a proxy war. This world is crazy, guys. Weird things are happening, but unfortunately, well, every country would prefer to fight not on their own soil. And that brings us to the proxy wars. Unfortunately, weaker countries are suffering this. And I know this from the history, for example, from Poland in the Second World War. Second World War started on the 1st of December 1939 with the German attack on Poland. They invaded our lands, and on 17 of October 1939, Russia attacked Poland from the east. Germans from the west, Russia from the east, and they fought with each other on our grounds. Actually, they didn't fight because they were allies back then. Due to the pact Ribbentrop-Molotov, but on Polish soil we have to fight from the both sides. So you can see that the history, it happens all over the place, all over the globe. History loves to repeat itself. Location: Ukraine and Russia. 2014. Who remembers what happened? Russia took Crimea, invaded Crimea with soldiers called green soldiers, because there was an attack on Crimea with soldiers of not specified nationality. They didn't have any emblems on them. Everybody knew they are from Russia, but Russians were smart and they were not showing this. And then Russia is fighting in the East Ukraine using, let's say, independent army. They are not directly influenced in this conflict. They are indirectly influenced in this conflict. But here I want to show you what happened to Ukrainian assets, because the war was on their soil. Let's see. This is American dollar to Ukrainian hryvnia. This is their currency. Look at this. Quick. 8 hryvnias for $1. Conflict starts in 2014. We go from 8 hryvnias to $1 to 34 hryvnias to $1. Absolutely amazing. Almost 1 year. 1 year, and we had such a rise. So for the country where the conflict is, conflict is absolutely huge. Okay, that was absolutely huge. Look at Ukraine stock exchange. What happened? Conflict started here. and then it absolutely destroyed local economy. Absolutely destroyed local economy. They went from the positive GDP to double-digit negative. 2014, 2015, huge slide. After this, they recovered. But look what happened. 2 years of huge decline. How can, so imagine you are a Ukrainian citizen, Russia invades you. What can you do? Your currency is going down like crazy. Your stocks is going down like crazy. You have some savings. You still want to maybe not earn money on the stock exchange, but at least not to lose. Because once you're keeping your local currency, you're just basically losing money. What could Ukrainians do? Is here. Look, this is gold. This gold line is gold. Candles are gold in hryvnias, in Ukrainian currency. If you kept hryvnias, as you can see here, you were losing money, because for $1 before the conflict you paid 8 hryvnias, and then 1 month later for $1 you paid 30 hryvnias. So you are losing a lot of money. But what if you would exchange with hryvnias, you would buy gold? If you would buy gold in hryvnias, you would buy here, and look what happened with the price of gold in hryvnias. This is the price of gold in dollars, going down. But in hryvnias, in the local currency, up. And stays up till now. The result of this, the lesson from this, is pretty simple. Once there is an armed conflict in your country, the best strategy to preserve your capital is to buy gold in your local currency. Simple as this. Because your local currency decreases, gold is a safe haven asset, and by buying gold in your local currency, you're protecting your assets from devaluing, your currency from devaluing. Okay? Beautiful. Thank you. I think we have that right. Okay, my friends, what do you think about this? What do you think about this situation, the behavior of stocks, currencies, gold? Is it clear? Do you like it? Is the message that I'm trying to show you is clear? It is clear, I think, because I showed you a lot of tables, a lot of examples, not a lot of text, but hard data. You cannot really argue with mathematics. My friends, if you just came here because you wanted to know about the behavior of instruments during armed conflicts, fair enough. I welcome you. But if you came here also to learn how to trade, this is awesome, because you need to contact your account manager or just write us an email, and you will get those webinars that we did before. They are recorded and they are showing how to start. They are explaining basics of investing. For example, Kickstart Your Trading Career, Holiday Trading Course. We all have it recorded, and you can obtain those recordings and learn from them. Okay? What is more, my friends, on Monday we start special cycle of webinars. We will have 9 webinars. We will have 3 webinars every week, so it will last 3 weeks. It will be done by me and my colleague by my colleague Mitun, very skilled trader as well. And we'll move from very, very basics of investing. We'll tell you how the platform works, what are the forex market, bond market, stock market, etc. And with every lesson, we'll move further to more advanced topics. And after those 9 webinars, this will be 9 hours of knowledge, you will seriously be able to create your own trading strategy, and you will know a lot about trading. So I strongly advise you to attend this event. I will give you the link now in the chat. Wait a minute, wait a second. Here. You can register here. Okay. Yes. Here, register, and you will be able to attend those webinars that we prepared for you. It starts on Monday. Okay. If you want to follow our trades, because for example, I'm posting on my Twitter account the best trading strategies, the best setups that I can see on the chart. I'm recording a video almost every day with 3 best trading strategies, and they can be seen on my Twitter. You can also attend Axiori Twitter. As you can see, we post setups. We follow those setups. Obviously, we cannot tell you if you should trade or not trade. We don't give any recommendations because it's against the law, obviously. But I am posting the best occasions, the best setups that I can see on the market. So this can be helpful for you at the very beginning when you start trading, and you don't know how to spot good occasions. You can take a look on those setups. Here is email, my friends. Write down this email, support@axiori.com, and on this email send everything what you need. So if you need the recording of the previous videos, if you want the recording of this video, please write to support@axiori.com and tell them we need links to those videos. And please send us links to the previous webinars, because Tomasz Wiśniewski said that there are webinars for beginners, and I would love to learn about the Forex, so send me the link to beginners webinars. Please, this is this address. Okay? Yes. Maria, thank you very much for your kind message. Yes, it is absolutely for free. I know I was struggling at the very beginning 10 years ago with all this start of trading. I didn't know how to do this. I learned a lot myself. I know how difficult it is. And now I just want to share my knowledge with you guys, because I've been at your place 10 years ago. I know how it is. And I know that having someone to guide you is priceless. Small disclaimer, guys, we do not give investment advices. No. We don't give recommendations. I'm just presenting my own opinion. I am not telling you to buy or sell, because I cannot, I don't want to, and it's forbidden by law. Thank you very much, my friends. I hope this is clear, everything is clear. And let me hear your questions. If you have any questions, I would be more than happy to answer. But I think everything was clear. Again, you can really write to support@axiori.com if you need something. They will be more than happy to answer. Okay, no questions. I don't see any questions. Beautiful. My friends, I wish you all the best in your trading. I wish you all the best in your journey that you are about to start. And seriously, Axiori can help you a lot with the best platform, with the best instruments, with the best spreads, with all this technical side, but also in education and analytical content. I'm responsible for this in Axiori, and I do my best to provide you the top quality content for you, education and analytical. So I hope to see you, because we will start this cycle of webinars on Monday, and you all have to be there on Monday. Okay, so see you on Monday. Have a nice weekend. Take rest. Enjoy your weekend, because on Monday we start intensive cycle of investing, of education. Okay, thank you very much, and all the best.